subscribing to our channel. My name is Ignata Klein Forex. I'm going to teach you Forex trading terminology, what we call Forex trading terminology. So this is the topic for the day, Forex trading terminology. First of all, what is Forex trading terminology? Forex trading terminology comes with its very own set of terms and jargons. So therefore, you go on deeper into learning how to trade the FX market. It's important to understand some of this basic trading terminology and to understand these things, Forex terminology. So we are going to have some basic terms that you are going to come across. The first of is cross rate. Cross rate. Take note of this because they are important, as we are going to learn more about it. Cross rate. We'll be talking about the currency exchange rate between two currencies, both of which are not the official currency of the country in which the exchange rate quote is given. The phrase is also sometimes used to refer currency quotes which do not involve the US dollar, regardless of which country the quote is provided. So the cross rate, we'll be talking about the currency rate, the currency exchange. The currency exchange rate between two currencies. Are we together? So take note of these things. Then we go on to talk about another basic term of Forex trading, which is exchange rate. Exchange rate. What is exchange rate? So exchange rate, we'll be talking about this, involves the value of one currency expressed in terms of another. The value of one currency. The value of one currency expressed to another. Are we together? Take note of these. These are important. They are very important. So when we'll be talking about exchange rate, these are the value of one currency expressed to another. For example, we might have, let me give you an example, e.g. Euro, stroke USD, stroke USD. You see, is which value can we see? Value, you can say 1.3400. So this is the exchange rate, which means 1 euro. So the meaning is 1 euro. 1 euro. 1 euro is worth 1.3400, isn't it? So this is the exchange rate. So we go to another terminology, another Forex terminology, We have what is called PIP. PIP. It's important. This one is also important. Take note of this. It's also important. We'll be talking about the smallest increment of the price movement a current can make. The smallest increment. The smallest increment of price movement. The price movement a current can make. I think we are getting together. We are getting together. So this is the PIP. When we be talking about the PIP, the movement, the smallest increment of price movement a current can make. For example, will be like, let me check example. Like you might be having this same value 1, let's say 1,34 00. Then it moves to 1,3401. So there is a movement. So that's when we'll be saying the PIP, the increment, the change of the value, that movement in the current value. That is the meaning of the word PIP. Then from there we go. Let me rub this. Sorry, let me rub this so that we go for another one. We have another one which is leverage. Take note of this. Take note of this. We have another one called leverage. Leverage. What is leverage? So leverage is the ability to gear your account into a position greater than your total amount, account margin. For example, if a trader has 1,000 of the margin in his account and he opens an account with 100,000, the position he leverage his account by 100 times or 100:1. If you open an account with 200,000 position with 1,000 of the margin in his account, his leverage is 200 times or 2:1. Increasingly, your leverage magnifies both the gains and loss. So leverage, we'll be talking about what? The ability to gear your account into a position greater than your total amount. The total account margin. So that's the definition of leverage. Then we go on to talk about from leverage, that margin, this word margin, we'll talk about it here. What is margin? These are important forex trading terminology. You can't trade well without knowing these things. First of all, you need to know all these things so that when you be trading, it will be nice and you'll be trading so good and nice. So margin is important to know about leverage, so that when you be placing your positions, you don't over leverage. You don't make your account red. The leverage must not be red. So make sure when you be trading, you know these things. So the margin, we'll be talking about the deposit required to open or to maintain a position. The margin, we'll be talking about the deposit required or required to open or to place a trade. Required to open required to open or maintain the position. That's the margin. Then from margin, we went to spread. This is the last term. What is the spread? Spread, we'll be talking about the difference between the sell quote and the buy quote, or the bid or the offer price. So we'll be talking about the difference between the bid and the ask price. That's the spread. If you go to your MetaTrader 5, you're going to see that you'll be seeing two prices, the first price and the second price. For example, you'll be having like something like this, euro. Again, let me say euro, USD. And you'll be having prices like this, 1,34. I'm just writing from my mind. So even if I did wrong, I'm just writing 1,34, and here we'll be finding something like 1,43, 1,40. Let's make 35 point like this. So the difference between this price and this one, that is what we call the spread. The spread. So thank you for joining us in the learning the forex trading terminology. We are going to continue about these things, forex trading terminology. We will be understanding more about the bid and ask, and we'll be also understanding more about uh, the code, the pay codes, current pay codes. So it's about this is going to be for another lesson. So I want to thank you for joining and tuning in. Don't forget to subscribe to our channel so that it will grow, and I'll keep on delivering more and more messages. So if you are new to this channel, don't forget to subscribe, like, comment, and share. Shalom. Thank you.